Welcome back to the Disrupting Podcast. Special guest is in the building today, Andrew Dudum from HIMS and HERS, a company that both Alex and I have been following prior to even them going SPAC merger via Oaktree Capital. This is a multi-specialty health platform, telehealth platform, that's focused on providing modern, personalized health and wellness experiences to consumers. Andrew, thank you so much for joining us today.
Yeah, thank you for having me, guys.
Yeah, no, this is an exciting space that's relatively new. And I know that a lot of retail traders are eager to learn more about it. So the U.S. healthcare, as we know, is massive.
Yeah.
Spending reaching near $4 trillion in 2019. It's also notorious for being complicated sector, generally moves really slow, kind of antiquated, right? And which leaves the door wide open for new businesses like yours that's relatively new to bring solutions to the market.
Yeah.
So without getting into the details of your company quite yet, because we're excited to get there, can you tell us just where you see the biggest opportunity for disrupting just the U.S. healthcare industry?
Yeah, no, it's a great tip. I think you hit on the big points. You essentially have in the U.S. healthcare market the last multi-trillion-dollar industry in the United States that has yet to be touched by technology, right? Which is a very crazy concept. And what I mean by technology is this thing we have in our hands. For every other sector in the country, finance, real estate, commerce, transportation, you can pick up your phone, you can click a button and get access as a consumer to the full suite of services, products, specialties, right there with price transparency and with you as a customer empowered to make a purchase, right? To make a decision. Every single industry except healthcare, right? Mm-hmm. And it makes no sense. And so the underlying dynamics of why is that the healthcare system is built on incredibly entrenched, very perverse in most situations, incentives between payers, insurance companies, employers, health systems, physicians, contracts and incentives, all of which are pointed in the direction of each other, but none with the end goal of making the customer more empowered, healthier, happier, spending less money. So you have a system that is essentially broken, right? Healthcare spending is through the roof, as you mentioned. The average deductible in this country is $2,000 to $3,000 per year. That means that the average American has to pay $2,000 in cash before they even get the benefit of insurance. So people are paying hundreds of bucks per month before even realizing that insurance is helpful. People are sicker than ever. We're spending more on the system. It's completely broken. So in the last couple of years, laws have changed that now let companies like us exist that essentially broker the healthcare system. You as a customer can go to forhims.com or forhers.com. You can get connected with a doctor on our platform immediately. And for 20 or 30 bucks, you get access to a doctor, unlimited visits to talk to them and message them, prescriptions and medications personalized for you, and all of that delivered to your door for 20 to 30 bucks. And if you go and use insurance, it might cost 20 to 30 bucks just to talk to that doctor once. So it's a huge, what we're doing is a huge unraveling of the healthcare system. It's in the first couple of years of happening, but over the next decade, nearly all of health-related questions, concerns, kind of first steps are going to take place on a platform like HIMS and HERS.
So like you said, HIMS and HERS is a digital, consumer-facing healthcare platform, and you deal from sexual health, hair loss, I'm balding, dermatology, mental health, and sometimes it feels intimidating to do it in person. Also cause people not to go and get treated. Can you kind of walk us through the consumer roadmap and how people seek care and how the subscription model works and the overall benefits of using the platform?
Yeah, so with HIMS and HERS, all of that, and I would categorize that as stigma, right? There's a degree of uncomfortableness, right, with regard to me talking about, as a man, or for women, there's plenty of issues where this is uncomfortable, talking about something you're struggling with, right? And so what we allow you to do is come to the HIMS and HERS platform, digitally submit in almost all states a whole bunch of information relating to the issue you're struggling with. And what this is it's a clinical intake form. It's telling us when you started experiencing symptoms, what you've tried, what medicines you're on, what degree of those symptoms, how long have they been around for, all of the things necessary for a physician to take a look at you and understand, roughly speaking, what type of conversation we should be having, right?
Sounds efficient.
It's very efficient, right? Because most of the time what that is you sitting and waiting in a waiting room in a doctor's office, having taken 2 hours off of work, or you're sitting there, you get called in, you're waiting for 45 minutes, the doctor comes in and just starts asking you stupid basic questions. We take care of that within seconds, right? You click a button and you're immediately submitting this information. Then what happens is a doctor is connected with you. You can chat back and forth, message if that's what you're most comfortable with. You could jump on a phone call if you want. You could video if you'd like. But all of those abilities are right there in front of you. A lot of people just prefer to message, frankly. It makes sense. You're sitting at work. You're worried about acne. You're texting a doctor on the side. It's kind of the ideal situation, frankly. And so all of that can happen in a digital way that gives you a certain amount of comfort, right? You're not sitting there face to face talking about your depression and maybe not being particularly, transparent about how much you're really suffering or how bad it really is because you feel self-conscious. Instead, you're typing and you're saying, hey, I actually don't feel well. It's been 6 months. Here's what's happening. Here's what I'm thinking about. And you're able to really open up. And so we see patients, we have thousands of patients every day who are coming through and having these consultations, and they really do open up and share what they're struggling with. And so once that's complete, you then sign up for a simple membership plan. It's monthly price. Usually they're about 20 to 30 bucks. And that price includes everything you need for that issue, right? You get the doctor, you can message them all day long. You can have follow-up visits year round. Like there's no co-pays, there's no extra costs associated with that. You get the medicine you need shipped to you, delivered to your door with whatever cadence. If you want to change the dosage, if you want to adjust it, you just talk to your doctor, they'll update it, and then it's shipped to your door. And that's how this business works. It's essentially a subscription business. We have over 500,000 members that are monthly paying subscribers. 94% of our revenue is subscription revenue. And that's the really simple model that we've created. We just keep launching new categories so more people can come to us, say, I'm struggling with X, Y, and Z. Can you guys help me?
Absolutely.
Well, I love that you talked about, how you capture this comprehensive overview up front, because you think about it, to your point, I've sat in doctors' offices filling out paperwork, checking off 100 boxes, and what time do they really have to review that before they see me? So how efficient and thorough is that particular session, right? So, and you figure, hospitals and private offices, the operational costs are expensive. So here's a platform that's perhaps driving more operational efficiency and value to the end user, me, who's there for my health. So
and that's why, by the way, that's why we're able to deliver all of this so efficiently at a price point that is cheaper than insurance, is because we built the whole thing in the cloud. The whole thing is technology powered. So instead of that doctor, with you sitting right there in front of you, looking at your chart, reading the chart you had just filled out, instead of just asking you the question, like all this wasted time, all of that's gone. So when you rip out that inefficiency, when you rip out those costs, we can then pass that saving back to the customer, and that's how we're able to deliver all of this for that simple price.
It's fantastic. I mean, my mind immediately thinks, is this licensable to private practices? I go to a private practice that I'm really happy with, but I see all the inefficiencies around the office, and I could see them really thriving with a platform of this nature. Anywho, one of my big questions that Alex and I have been really curious about is just coronavirus in general. We saw the massive outbreak, but how has it impacted the business and the company's overall strategy for delivering healthcare solutions? So
what the pandemic did for our business was really accelerate people's awareness and understanding of what we do.
Yeah.
3 years ago when we launched this thing, people asked me, is it safe for people to be talking about medicine and treatments online? Is it safe to be able to text message with a doctor? Is it okay to send them a picture of your acne and then have the doctor say, oh, I think that's, hormonal acne. Maybe let's try this. Is all of that safe? Now, 3 years later, everybody tells you this is the future. And it is, right? And without question, it's activating more customers into the healthcare system than ever before, right? Here's like a crazy statistic. It took us 1 year to do 1 million medical visits on our platform.
Yeah.
Right, the company's just 3 years old, 3 or 4 years old. It took Teladoc, $20 billion public company, 13 years.
Yeah.
Yes, sir.
13 years. That's crazy.
Yeah.
Right?
Kudos to you, Andrew.
Well, just like put that in perspective of essentially how much a platform like this, where customers have the choice, they can pick up their phone and say, yes, let's start. How much that's empowering people to come into the healthcare system and acknowledge that they're struggling with something and start a process to make it better. So what the pandemic did was really shift this conversation from is this safe to how do we make sure that this is done correctly, because it's clearly the future.
HIPAA compliance is a massive hurdle that any engineer has to navigate around and ensure that things are on the par. But it makes total sense that it accelerated a lot of growth. And again, going back to convenience, if people can virtually connect with the doctor, why wouldn't you? So
the best thing about that's the one thing that everyone needs to realize. When I look at a company, and I want everyone to look at the company, is look at the growth aspect of the company. And the way that you guys are positioned, you're positioned for rapid growth in such a small time frame that Teladoc and all of the competitors didn't have, and they never even thought about taking the digital platform and making that the main play. And you guys are basically going to have reoccurring customers forever, because a lot of it, I see a big attraction to the youth. A lot of college, young adults, people that are stay-at-home moms, dads working from home, anybody. They're going to want to do it from their phone. They're going to want to be able to, hey, I'm not going to travel. I don't want to waste gas. I got this. Hey, I can do it at school. I can do it during break and get everything taken care of right then and there. And that's why you see such a massive growth in consultations in such a short period of time. And I think that it's reflected in the performance of the company. So you guys go ahead, Dana.
That's a really good point, Alex. And I got to just ask Andrew this. Do you think that's part of your secret sauce? Here's Teladoc that's kind of sterile and everything you'd expect from a health company. And then there's HIMS and HERS that has beautiful marketing, great brand messaging. You guys clearly get, the younger, savvier consumer base that are digitally focused, savvy enough to look up, online reviews. Do you think, the question is, is that part of your secret sauce, going after, this demographic of people?
Yeah, absolutely.
It makes total sense.
It's basically in our face. You're seeing the way that
It's right. It's not rocket science, right?
Yeah.
Think about it from this perspective. You asked me this, Alex, before we got started. How old am I? I'm 33. Okay, so my time horizon for building a huge company is not 2 years when I'm 35, right?
Yeah.
It's 10 or 20 years.
Yeah.
Right? Okay, so if that's the case, if I'm optimizing for how do you build a really big fucking company over the next decade or 2 decades, and the vision is to revolutionize healthcare, it would be foolish to go target people who are 50 and 60,
exactly.
Which is what most healthcare companies do, right? They go after the people who are really paying dollars today because they're sick. The problem with that strategy is my dad is not the healthcare customer of the future, right? My 18-year-old cousin is, right? Who's going to be on her phone, TikToking, trying to get, acne medication and, sleep issues and struggling with anxiety or depression, all of these normal things. And then as she gets older, she's going to need more services too. And so the strategy has been one where 10 to 20 years is the target investment time frame. And so with that as the context, you go target people who are 20 years old right now.
Yeah.
Right.
Yeah. Those people, everyone.
That's right. And those people have very different expectations from people who are 60. They grew up with the internet, like in their phone. They're clicking nonstop.
Yep.
They're not going to like, everybody who comes to Hims and Hers today essentially is insured, almost every single person. And a lot of them, if not all of them, have something like Teladoc or Amwell already as a benefit within their program, their benefits program. But they still come to us. That targeting, that ability to build something they love, market to them, acquire them, monetize them, engage them, retain them, that's the sauce. That's the thing that will drive compounding, returns and benefits in this company.
Absolutely. And the thing is that I couldn't agree more. To add to your point is that you can see it in the reviews of your company from multiple customers. I work with people that are 30, 27 years old, and they're going through Hims and Hers, and they've actually said, I love it. You're talking to real, like, licensed doctors. They're always there, like you said at the beginning. They're, no matter what they want, they're taken care of. And for young adults, college adults, it's intimidating. You don't know, you don't expect to be taken care of. You feel like it's a brand new doctor. You don't want to go with the family doctor. I'm on my own. And so be able to go through Hims and Hers, and the way that you guys are taking advantage of the situation with digital and targeting the youth, you have reoccurring customers. And I'll say this is that there's nothing better for marketing. You see with like the likes of Tesla, they don't really pay anything for marketing. It's the word of mouth. When you hear word of mouth, the best marketing comes from the youth and from college students, high school, brand new 30-year-olds. They're the best ones for it. So like we said at the beginning, going to my question is like the company is performing fantastic and to date at a high level, and it's reflected in the last couple of earnings. And you guys, again, are a relatively young company. In the last 3 years' time, you've accumulated over 500,000 subscribers, still growing. Last Q3 earnings, you showed a 91% year-over-year growth in net revenue, 76% gross margins, phenomenal.
Love the margins.
And on top of that, your consumer average continues to grow for per consumer. Average order is around $67. Like, that's insane in my mind. So the question is, how do you grow into a multi-billion-dollar healthcare juggernaut with like continuing this type of performance for the near future?
Yeah. So I was running a venture fund for about a decade before I started this company.
Your parents have to be really proud of you, Andrew.
What's that?
Your parents have to be really proud of you.
Oh, they are, but mostly because of my newborn son.
Congratulations.
Congratulations, man.
Thank you. And the reason that I left that fund, and it was a studio model where we were building companies. It was a couple $100 million in funding from people like Peter Thiel and Mark Andreessen. We were prototyping 20, 30 company ideas a year. We'd build a few of them every single year. So I've been a part of that incubation of starting things a lot for a long time. And I've watched as really great companies have launched, scaled, and then flatlined.
Yeah.
Right? I was at Wharton when the Warby Parker and the Harry's guys were there, and they launched those companies. In the beginning, amazing companies, right? And I think all of that first generation of direct-to-consumer companies were great. But then people started to see pretty quickly, oh shit, after about 100 million in revenue or 200 million in revenue or maybe 300 million in revenue, they totally flatline, right? They're spending a lot of money on Facebook. They're selling one product for the most part. And after 4 years of blasting that message to all the digital marketing channels, you've pretty much saturated every person who's a guy who would want the Harry's razor, or who's, this person who wants this type of single product. So that was my fear with starting any business like this. And this is a long way, Alex, of answering your question, but I think it's like important context.
No, absolutely.
Like, that's why we named the company Hims and Hers.
Yeah.
Is because the opportunity here is to build a health and wellness consumer brand that can sell you anything from medication for sleep to cognitive behavioral therapy, digital content for insomnia as well, to back pain products, OTC products, coaching services, anything related to helping you feel well and be your best self. And that is a wide spectrum, from content to services to OTC products to pharmaceutical medications, the whole thing. Yeah, I mean, the opportunity to build one consumer brand that's known and trusted for health and wellness, and then underneath that, build 10 or 20 different businesses that target very different customers and very different conditions and very different products, and then have all that revenue layered on top of each other. That's an incredibly defensible public company, right? You get 10% of your business from women post-menopause struggling with hair loss, 10% of your business from teenage girls struggling from acne, 10% of your business from 27-year-old men struggling from anxiety, 10% of your business, from women struggling with anti-aging who are 34. Very different people, very different problems, all really solving needs, but in a diversified way that allows you to maintain a very robust growth rate over a long period of time, compound those benefits, and then have very, very strong defensibility with regard to that revenue base as you scale.
Love it.
Well, so Andrew, I love that, right? You're a multi-dimensional business. You're able to, essentially the end goal is to service every little healthcare need. At what rate, though, are you guys onboarding new functions, new features, new dimensions of your business? I mean, we keep up with you guys, and it's a struggle because you're constantly adding new things that are exciting. But at what rate, are you guys adding things? And
yeah, it's pretty damn fast. I think that the team is sprinting. I mean, like really sprinting. If you've been paying attention in the last month, you'll see things like we launched in 7,000 Walgreens locations, right? Nationwide rollout, every one of those 7,000 stores with HIMS and HERS products. We announced, I think a couple days ago, full Amazon rollout. We launched a week ago a full mobile platform that gives these 500,000 subscribers 24/7 access to concierge services, member benefits and discounts on products to purchase on the platform. This whole world of program content, which is, you can kind of think of it as like Peloton for healthcare. Like, I'm worried about,
but better delivery. Better delivery.
Better delivery. That's right.
Yeah.
Without some of the recent challenges, like the ability to click play on the original content to help educate me on a condition I might be worried about, to help kind of nurture me through the flow. So we are building. Oh, and then launching an Ohio pharmacy, 300,000 square foot pharmacy fulfillment center, fully verticalizing our own pharmacy. I mean, so we're building the infrastructure, we're building the consumer experiences, we're building the retail presence, the brand building initiatives. It's just really fun. It's a really fun time to be at the company because you've got a small team. It's just over 300 people. It's going to do over $250 million in revenue is the guidance for this year, in its third or fourth year of operation. And I think we're still in the first few years of what will be a 10 to 15 year transformation here. So we're taking that opportunity and we're running at it.
And that's where, like you just said that, like how much per annual revenue?
I think this year's guidance is over $250 million.
And you guys continuously outperform expectations and you increase your guidance. And that should be just...
Try to.
Well, you don't try, you guys have. And that should be like gold to people's eyes, just seeing that. That's very impressive.
But you mentioned kind of on-demand play, and forgive me, I'm familiar with the platform, but thankfully I don't have to come to it frequently for needs. But are you building out like an on-demand, asset library per se that people will be able to just get, quicker, instant gratification?
Absolutely. Yeah. If you are a HIMS or HERS member for, let's say, anxiety or depression, right, and you have a membership with us with that condition, when you're in the mobile app, you have this whole world of other conditions and content right at your fingertips. Mm-hmm. So you can go over to the program side, you can go to the men's section, you can go to dermatology, and you can see that, there's a hair loss program. Let me learn about hair loss. Let me see if there's any products maybe I should start adding to my routine. You click play, start watching that. Right? Oh, maybe I should look at something for anti-aging. I'm 34, my skin's not looking like I'm 20 anymore. Maybe I should start getting into a regimen. Click play on that program, start learning about it. So it's this world that I think is all about helping educate these people and encourage them to seek care for things that maybe they're a little bit uncomfortable discussing.
Is that one of the biggest hurdles, though, for the company, just driving awareness? Like people aren't enthusiastic to go and do due diligence on a particular condition, but perhaps you making it aware that, hey, this is common, that's part of the destigmatization of this. And one of the goals that I ask my team to kind of reach for is that every piece of marketing we put out is the catalyst for a conversation.
Yes.
Yeah. Love it.
When you see one of our pieces of marketing, it should make you look at somebody you're next to and be like, whoa,
it's inviting.
That's you, bro.
Should we talk about that? That's pretty funny, or that's a little uncomfortable, or that's a little different, right? And so when you look at our marketing, there's an intentionality around starting conversations relating to things you don't normally talk about. Because the resistance and the hesitancy, the reluctancy, the stigma associated with all of these conditions, depression, acne, sleep issues, fertility issues, those are the primary reasons people aren't getting treated. Right? That's the number one reason the young demographic is not going and seeking care, is they're there's like I don't know if I want to do that. So starting those conversations, making that normal, but doing it in a way that is fun and is empowering and kind of is irreverent and quirky and youthful and authentic, that's a big part of the whole thing.
Clearly effective too. You guys have fantastic marketing.
Oh, thank you.
Yeah, I mean, hats off. And there's one of our peers, Tom Nash, did a really good video on you guys. And when it comes to looking at a successful company, obviously when earnings come around, you see the increase year over year. It's great and all, but when you look at the SEC filings overall, your guys' return on investment is by far like a top 10% in the whole market. And it just shows that you guys are efficient with your money. When you guys make money, you guys are building out infrastructure. When you guys make money, you're putting it back into your marketing. You're seeing it with your partnerships with Miley Cyrus, Gronk, doing your marketing on TikTok. To be able to be an efficient digitalized company is to have an efficient return on investment. And I love that. We talked about
works.
Yeah, it works well. And you spoke about Amazon, you spoke about Walgreens. Can you kind of like talk about how that strategic partnership, what are the things that entail with it? Like, how do you think that that's going to be kind of a win-win situation for both them and for HIMS and Hers?
Yeah, is it like in-store kiosk, or I mean, what's the Walgreens?
It's in-store end units and in-aisle kind of placements for a whole range of products. I mean, I think for these retailers, you look at, we're in nearly 2,000 Target locations. Target, Walgreens, these companies are trying to figure out how to attract young people into their stores.
Yeah.
Right? Because it's so easy to buy something on Amazon and never show up. Right? So when they meet a company like us, they get really excited. We have a whole bunch of retailers that are saying, hey, how do we get you in our stores? We'd love to have these products in our aisles because we know people will show up for them. So it's a really beneficial relationship on both sides because they are able to attract a different audience. And from my standpoint, those partnerships are all about billboards. I mean, when I think of building the HIMS and Hers company, it's building a long-term trusted brand. And you can't do that by just showing up in a Facebook ad, right? You got to show up in person while people are watching TV, while people are listening to radio, while they're driving on the highway, on the billboard. You need their friends talking about it, like you were saying, Alex. You need word of mouth to happen. You need celebrities that they love and respect talking about it. You need this whole world kind of around them talking about it for them to say, okay, this thing seems like it's worth my time to take a look at. So I see all of these retail partnerships as profitable billboards.
Absolutely.
Walgreens is paying us for us to have a massive billboard in 7,000 locations. That's That's literally how I think about all of those deals.
We know the company recently announced you guys are going to develop or launch a mobile app.
Yeah.
Which is exciting, right? You have to think about like referral systems that you'll have integrated. But what's the core feature set look like? What's the timeline for this? And can you talk to us about like how it might help with customer retention and maybe cutting customer acquisition costs?
Yeah, it's really focused on both of those two things, actually. So first and foremost, because of all this marketing we're doing, people are looking for Hims and Hers in a lot of places. And they come to the App Store and they search Hims and Hers to try to access our products all the time. Showing up there is an immediate way to start acquiring for free existing demand for the Hims and Hers platform. So I think you have a nice benefit in that there will be efficiencies in marketing. There'll be organic ability to acquire customers there. It's a whole new digital channel to start acquiring. So I think that's a huge one. And then from an engagement and retention standpoint, the mobile platform is all about making these 500,000 people happier and healthier. And that's it. Give them abilities to talk to a doctor whenever they need. Period. Like no questions, no credit card pull out, no waiting times. Just like you have a question, send a message and we'll help you get that answered. Right? You're interested in buying some products, we're gonna give you discounts on them. Just so it's a no-brainer. You're worried you want to try the shampoo, try it. It's
push notification deals,
swipe, purchase. Like as a member, you want to get access to a new product that hasn't launched to everybody. It's right there.
Well, we talked too about how powerful consumer word of mouth is. I'm sure you'll probably integrate some strong referral tools so that someone like myself who's dealing with gray hair might be referring someone. One of my buddies is dealing with the same problem. I don't know.
Yeah, you can with the mobile platform. You can do push notifications. You can do deep linking. You can build connections with a community. Start sharing, referring. All of those things are powerful when it comes to engagement, retention, and ultimately lifetime value.
Well, it's sticky too, right? I don't have any health apps on my phone. I have an Apple Watch, but I can see the grand vision here of having one application that manages all of my health in one place in the palm of my hand,
Like Dana said, you guys are going to be the one-stop shop for anything medical, and you're positioning yourselves very well, and everyone's going to be rotating that sooner or later, and you're going to already be ahead of them. And again, it's really reflected in the way that you guys are outperforming your market expectations. I said earlier, you're outperforming and you're increasing your annual guidances, your revenue, quarterly EPS, you're outperforming. Yet the stock price doesn't seem to reflect the exciting growth. We've seen the recent announcements, like I said, with Walgreens, Amazon, still nothing. Do you have an opinion on what major capital management teams and retail investors are waiting to see from Hims and Hers?
I think there's so much chaos, to be honest, in the public markets right now.
Yeah.
Like the reality is there's so many new offerings coming to market. You had hundreds of companies via SPAC go public.
Mm-hmm.
Yep.
Unclear how many of them are great companies. You've got a lot of distrust. You have some companies trading at multiples that make no sense. You have other companies I was just looking at. You have companies like Talkspace went public.
Mm-hmm.
At $10, it's trading at $2.
Yeah.
Right today. I mean, there's chaos, I think, in the markets, and what that has done is created a lot of fragmentation and movement away from fundamentals.
Yeah.
And this happens in the public markets from time to time. This is not new. This is just kind of everyday course. Almost always that corrects itself over time.
Yeah.
Right. I think for us in particular, you have hedge funds shorting SPACs, right? Because they think, you're a SPAC, you went public via SPAC, you're probably full of shit as a company. Yeah. They don't spend the time to look at the companies they're shorting. There's a theme that SPACs are generally inflated, and let's go short them as a bucket. So I think that's a dynamic, that's a reality in the market. I think you have some people who believe we will trend exactly like Teladoc. If Teladoc's revenue is up, HIMS's revenue will be up. If their revenue is down, HIMS's revenue will be down because we're both quote unquote telemedicine companies.
Mm-hmm.
So I think you have a lot of people saying, okay, Teladoc's revenue's coming down dramatically. We think maybe Hims and Hers will too. So I think there's a lot of thematic dynamics, and it's no surprise we're a young company, right? We have been public for less than a year. It takes a while for people to really look at the fundamentals to the degree to which that you guys have.
Mm-hmm.
Actually study the economics, study the P&Ls quarter over quarter, and say, oh, okay, now I understand the business. It's disconnected from the price, the stock price. And I think that process is still happening. And in the coming quarters, I wouldn't be surprised if that resolved itself to a certain degree. But definitely there's a lot of chaos in the market. And I think because we're a fairly new company, it's going to take a while for that establishment to take place.
I agree. And what really blows my mind is the fact that if a capital management team is just going to short you because you're a SPAC, I think it's completely idiotic, personally. Because if they actually took a time and looked at your guys' quarterly revenue and your reports, they would absolutely see the potential here. And let's bring fundamentals right now. You guys are actually, right now, price to sales ratio is 2.84. Pretty solid. Teladoc's 5.82. You guys are literally half a Teladoc, yet you guys are growing rapidly faster than what they did at the beginning. Obviously, two different sets. They're decades ahead of you guys, but you guys are growing really fast. And you're actually taking a decent amount of the total addressable market from them in the digital era and digital aspects of it. So I think that people need to look at both, look at what some advantages they have and some advantages you have, but you are really ahead of the game for future and reoccurring customers where they're focusing on, like you said at the beginning of this interview, the older era, the older ages, the older dynamic. And I think that there's exciting times for Hims and Hers, and people need to kind of look through the meat and potatoes of the company before just saying, oh, it's a SPAC, it's crap. It's going to go down to 4.2 here shortly. So, excited.
Yeah, no, I think the roadmap makes total sense. I think anyone who's watching this video for the first time probably now has a better understanding of the importance, the opportunity within the industry to disrupt the U.S. market, healthcare market, which is an overhaul is well overdue.
That's right.
Needless to say, I think you've said almost everything here. If you had a final statement per se for our users, and what might that be?
I think we're just really excited, frankly, to be in the public markets, to give people the opportunity to invest in growth. Right. Yeah. As a founder for the last 15 years, I've watched as the public markets have been consolidated to FANG, right? Like everyone's just putting money in Amazon, Google, Facebook, Microsoft, right? Just these companies. And it's because for the most part, innovation has not been brought to the public markets early, right? These companies stayed private for a decade or 2 decades. And by the time they went public, a lot of the growth was gone. So, for investors who like taking innovative bets, who believe in time horizons where you can really make a difference in an industry and create an enormous amount of meaningful change to people, I think there's a real opportunity in this business. And I think that's why we took the company public so early, right? It's not normal to take a company public 3 or 4 years after it's launched. But it's actually because I believe the story is a pretty special story. And me, as a retail investor, I would love to see a lot of companies like us in the public markets for me to put my money into, right? Like it's
tremendous opportunity, a lot of upside.
Yeah, for people who want big upside, who want to do research, want to have conviction in their bets. So, I think, Alex, to your point, it's going to take a while for people to get to know this business. It's a young business. It's a new business, but it's really exciting. And I think, quarter over quarter, we'll keep doing the best of our abilities to, kick ass and keep delivering growth and excitement and long-term defensibility. And ultimately, the markets catch up to it.
Well, yeah, I mean, I did a little research on this. Your company, as far as the business metrics and performance, performs better than most publicly traded companies.
Top
now, mind
10%.
you, you're still scaling and growing rapidly, but I mean, clearly the formula for success is on the wall. So hats off to you. Again, thank you so much for making time to connect with us. We've been huge advocates, brand evangelists of yours, product users. I'm excited for the mobile app, and just really happy to have this opportunity to engage with you and learn more about what you guys are up to. So thank you very much, Andrew.
Thank you, Andrew.
Yeah, you bet. Thank you guys for having me on. I appreciate it.